So Dave, one of the things we hear a lot from clients is they're always looking for ways to reduce their partnership with the business partner that people don't really love, which is Uncle Sam. We all have that business partner. We talk to clients a lot about that and work with their CPAs to really kind of lead with them on some of that planning. But one of the things that seems to come up a lot, and a lot of people have questions about it, is Section 179 with the accelerated depreciation. Can you talk a little bit about that in some of the conversations you've had with clients?
Absolutely. Yeah, would love to. And I think this is an area certainly that gets a lot of interest, in particular because certain vehicles would qualify for the bonus depreciation here. But let me start off by talking about depreciation because I think it's important to understand this definition first. Right now I'm sitting in a chair. All right, that chair is furniture, and furniture has as an asset. I can depreciate that asset over a set schedule of time that the IRS publishes based on what it is I'm depreciating. Okay, so furniture, computer equipment, anything that's a tangible asset typically has a depreciation schedule around that. Okay. Section 179 allows an immediate expense deduction that a business owner can take for the purchase of depreciable business equipment. Instead of capitalizing that and depreciating that asset over a period of time, they can take it as an expense all in the first year. So as an example, certain vehicles, right? If you have a business use for a vehicle, and let's just say that vehicle qualified for the Section 179 accelerated depreciation. If you bought a vehicle, and let's just say it was $100,000, normally you'd have to take depreciation over a certain period of time, or whatever the IRS table publishes around that particular asset. But with Section 179, you can take $100,000 tax deduction in that year. Which is pretty powerful. Now, there are some limits to it. The 2022 limit, the maximum deduction of $1,080,000 was the maximum deduction, and the value of property purchased for $2.7 million in 2022. They indexed that this year for 2023 ever so slightly, and part of it actually starts to go away this year, where you can only take about 80% of that value. So it's starting to go away, but it's still a very relevant deduction for a number of clients that may need to buy some type of equipment or tangible assets for their company. So Drew, I think you were going to use an example with one of your clients, I believe, that took advantage of this.
Yeah, really with a lot of business clients, especially people that have a large CapEx need, right? Capital expenditures, right. That they need to buy equipment. And we talk a lot about that. I mean, a lot of our world is rate of return, how markets do, et cetera. But there's so much value to an entrepreneur or a business owner that says, if I go out and buy 2 new trucks and I can hire 2 new guys or gals or 4 new guys and gals and put them in those trucks, I know what I can earn off that. And I'm going to have a really good tax year this year. Business has been doing really, really well. We're in growth mode. So it could be a great opportunity for them to add to their equipment, add to their staffing so they can continue that growth and get that deduction. And of course, working in concert with their CPA to make sure, what is that deduction? How is it going to look? How do they maximize it? I think the key also, we also want clients to know is that when you do that and you take that super depreciation in year one, you can't then, you're using that tax right up in the front. So if next year you have another really good year because you just put 2 new trucks on the road, then we sometimes can compound our effect, and now we got to buy 3 more trucks the next year. And worse problems to have than you're growing and trying to, again, get rid of Uncle Sam as your business partner. But these are all just conversations we have with clients, and through planning, we really can understand that we can't get rid of all tax all the time. Sometimes we do have to pay, but if we can be very strategic, knowing that we're going to buy more equipment and we want to continue to grow, taking advantage of Section 179 can be instrumental to their tax planning. And I really think it's just it's a fun topic to talk about. A lot of clients don't know it exists. So when you bring it to their attention and we, again, get with their CPAs or accounting professionals, it just can really open up a lot of good conversation and really inspire business owners to feel like they can expand their business, which is always a good thing.
Yeah, 100%. Thank you. And I think that is one of the things I just want to echo, right? I mean, deductions are fantastic. And if you need to get equipment anyway, or as Drew said, you know, if you need to put more trucks on the road and you can buy something in a year that you've had a really big year, next year you think is going to be a normal year, that's a wonderful time to take advantage of this tax deduction. But a lot of times you end up just deferring it, right? If you're going to have several big years in a row, probably not as advantageous because then you have no depreciation expense for that vehicle going forward, as an example. So if this is of interest to you, by the way, and you want to get some more information or just have a conversation with one of our advisors, hop on our website at instrumentalwealth.com, schedule time with myself, with Drew, any one of our advisors. We'd love to have a deeper conversation with you to see if this is something that you should potentially consider in concert with your tax advisor.